What's going on, traders? Welcome to the channel. My name's John. That's Groot. We trade options here. So lots of moving parts. Actually, market just closed a few minutes ago. I was able to sneak in a really quick income trade in AMC. So I now have two income trades in AMC, and I've been exploring laddering, talking about it a lot, and I'm going to explain that to you with a Tesla trade I put on a couple of days ago as well. All right, so we are in Think or Swim, looking at the chart for AMC. You'll see over the year, this is a daily chart. AMC is the ticker. Lots of movement, just up and down, all kinds of stuff. You're going to see the volume had picked up significantly in the last couple months, and this has really created good volatility opportunities, especially in premium option pricing. So that's really key for anyone looking to maybe consider the possibility of, quick trades for income or anything along those lines. Whenever there's a lot of volatility, it makes things a lot easier for options traders as a whole. What was interesting is we had a big spike when the GameStop thing was going on and AMC. And then you can see this lull here, this lull pattern, and it is representative in the volume of the chart too. And what has happened the last 2 days, actually, it has spiked dramatically, and I got lucky. I was actually in this stock a few days ago before this spike even happened, so I'm sitting on a good profit. But what I like is now it's time to enjoy more of that by today's trade. What I ended up seeing was some action higher. We tested kind of a resistance level and started dropping off, but the combination of this high volume 2 days plus going lower, this did mean that the put pricing has increased, so it was time to sell some puts against this. I'm jumping in at Tastyworks. I'll explain the AMC trade here. And basically what I did is 2 days ago, I sold the $10 put, and there's 14 days expiration. I sold it at $114 and is currently sitting on a profit of 67. So pretty good. It's 67, 114. I'm looking at 58% profit right now. And in the new one today, it does show I'm down. That's fine. I'm not that worried. But took in a credit at 156, and I'm looking to pocket premium off of that as well. So over time, we should see this look pretty good. So I'll jump in and explain this trade to you. So this was the $10 strike. 2 days in trade and already sitting on a good profit. But as I open up the new trade today, this was at 156. So basically, to give you an idea, 156. So my break-even point here on this trade is $10.44. So I would need this stock to go below $10.44 a share to be losing money on the trade. And what will happen in a cash secured put, I'm actually putting up the capital, which would essentially be $1,200 of, this is 12 times 100 shares. So I'm putting up $1,200 as collateral. And if the stock goes lower, then they will assign 100 shares to me. So this is nice. It still gives me some opportunity. If the stock has a lot of volatility and it goes lower, I'm still holding on to shares and I can sell more premium against it, or wait to see if the stock goes higher and back to my break even or anything like that. So you get a lot of choices, and pun intended here, you get a lot of options available to you. But probability of profit right now, it's saying about 60%. Fine, whatever, I'll take that. But the more important thing here is the amount of theta decay I take. So as of now, it's looking like it's about 4.6, so about $5 a day. And keep in mind, theta accelerates significantly towards expiration. So right now it's about 5, but in next week, midweek maybe, it could get to $6, $8, $10 there. So a really key thing with trading options there. All right, now next thing I want to really cover, this is such an important concept, it is laddering. And laddering, you can see I kind of did something similar with AMC, but let's explain it on a more dramatic stock like Tesla, which has been volatile. You'll see I'm negative right now, fine, but I really want to I want you to understand the concept here so it makes some sense. We're pretty close to my break even coming up here, but my original trade in Tesla was a few days ago, and it was the 600 and 590 put. So I sold 600, bought 590. I'm risk defined here in this trade, and what ended up happening is I pocketed, let's see, the original Tesla. was $243 premium. My next one though, it dropped a few more days later, so I took in a credit of $280. So $243 and $280. But here's the key thing. You see how originally I was at the 600 and 590 strikes? Now I lowered this, I'm at 580, 570, and I even pocketed more premium. So this gave me a chance to sort of spread my risk further. But the thing that I think is really important here is also what you do is you spread your break evens as well as your risk. And what I did, you'll look here, as we kind of zoom into the analysis, this is just a profit and loss diagram theoretically of what this trade setup would be. So from 600 to 597, that's about $2 to $3 difference there for break even. Well, and that's just the one trade setup. But if I do my full ladder and we go to analysis, you're going to see it's not 597 anymore. I've actually spread my break evens to about 595 and like 494 or 594. 5. There's a lot of 5s and 4s, but you can see how that changed, and really the stock's trading at 590 almost. So I'm literally 5 points away from break even. And if you've seen Tesla and how it moves, we've got tons of time. There's 35 days left to expiration. Really, we just need to see the market make certain moves. So this is an opportunity where you are not going to look at the profit and loss. You want to look at your probabilities. You want to look at the days to expiration and just let those work themselves out. So pretty important, but the next thing you're going to want to see here is original trade I set up with Tesla is going to be right here. And then another important concept is understanding implied volatility. That's coming up right here. We just talked about how that's important in selecting your stocks.